Good afternoon and welcome to CSU Bakersfield's Small Business Development Center Webinar Wednesday. Today's topic is equity crowdfunding. Thank you so much for joining us today. The CSUB SBDC is a part of America's SBDC Small Business Development Centers. Our particular catchment area is Kern, Mono, and Inyo counties as part of the 15-county representation through the UC Merced Regional Network. We do want to interact with you today during our webinar, so please use the question button either found at the top of your screen with a question symbol or to the right-hand side of your dashboard. We will answer the questions towards the end of the presentation. All attendees are muted except for myself, Angel Cottrell, who is your moderator, and our presenter, who is Kelly Bearden, our director of the Small Business Development Center. We're going to launch a poll today, and at the end of the webinar, there will be a survey. So if you fill the survey out, we'll be able to send you some of the materials from this webinar. What does the CSUB Small Business Development Center do? We provide high quality, no cost, confidential, one-on-one consulting. We do training for small business owners on a variety of topics and medias. We provide in-depth classes for small business owners, and we work on special projects and advocate for small business owners. Maria Contreras-Sweet, our new administrator of the U.S. Small Business Administration, says that the counseling is almost more important than the lending. I will tell you that as an SBDC consultant, one of the most important things that we promote with our clients is the counseling and educational portion to go along with capital. Education and money are something those working together do a better job of helping you succeed with what you want to do. Today's focus is probably our third or our fourth update on crowdfunding in general, and our second major update on equity crowdfunding. You're going to learn about crowdfunding platforms and what they must do to comply to the new rules that the SEC, the Security Exchange Commission, has just announced. This topic deals with selling stock or equity as part of promoting the business and raising capital for the business. So our expert on the topic today is Mr. Kelly Bearden, the director of the Small Business Development Center. Welcome, Kelly.
Well, thanks, Angel, and also thanks for all your assistance in doing the webinars. When we started using webinars as a training mechanism, as a training delivery service, we did it because largely our 3-county region and a lot of rural communities in Kern County benefited from this type of approach. But today we are reaching a milestone to where we are actually at number 50. And Angel was instrumental, did the very first webinar, a webinar called Webinar on doing webinars. And since then we've done dozens of topics, including this one on crowdfunding. So it's great to have Angel here, and kind of unique that both of us are here doing number 50 like we were number 1 back in January of 2013.
It's gone by fast, Kelly.
So 50 down, and probably, who knows, maybe 50 more next year. As popular as the series is getting, and we're getting a lot of positive feedback, and it's continuing, and thank you for attending. Hopefully you got a nice sandwich in front of you right now, or a good lunch, and we'll kind of provide you with the topic. So CSU Bakersfield and CSU Bakersfield SBDC has been very active in crowdfunding. In 2012, a Kickstarter campaign here on campus led to the actual production of a wooden sculpture of Dr. Martin Luther King that's right outside the library where we are today. And also in 2012, the SBDC got very engaged in crowdfunding. We had our first seminar in the fall of 2012 and then proceeded to do 2 more events, one in Ridgecrest in December on crowdfunding. In 2013, we were able to continue that trend with the webinars, and in 13, 14, and now 15 have continued doing webinars on crowdfunding. So we're excited today because ever since 2012, we've been talking about the promise of equity or investment crowdfunding. Equity and investment crowdfunding is really a bad title, and I really wished we could come up with something that's maybe less descriptive and more informative on what it actually is. But essentially, it's going to be selling stock in your business over the internet something that's never been allowed to even sell stock even without the internet before then, and changes security and exchange rules and regulations from 1934. So we'll get into that, and we do have rules that came out, as Angel had mentioned. The rules came out in around the end of October, I believe on the 30th, and they're the recommended rules, which are scheduled to be finalized in late January. So we'll cover a lot of those rules and how they're going to affect small businesses in raising capital in this innovative way of trying to capitalize small businesses, and look at the opportunities that are ahead. But really kind of, it's going to be a little more nuts and bolts, rulesy kind of thing, since the recommended rules came out in October, and it's really still kind of hard to find information on this topic. So that's what we've been doing. We also at CSUB SBDC, we've been actually able to utilize a junior or associate consultants in a class, and we have our own little crowdfunding crew. We've been active, have a few clients that we'll talk about that have had success in non-equity crowdfunding that we'll bring up in just a little bit. So the interest in crowdfunding from the SBDC's perspective is that, does crowdfunding translate into sales? Can it actually translate into jobs? And does it offer an investment opportunity? So the answer to those, we feel, is yes. Lending has changed dramatically since we entered into this capital freeze back in 2007. And it's changed dramatically from the standpoint of banks used to be the focal point of providing small business capital. And that has changed dramatically in just a matter of 7 or 8 years. The latest statistics I was reading in the Wall Street Journal a few weeks back is that it's really created an opportunity for a lot of online lenders that generally charge much higher interest rates, shorter terms, but the ease and flexibility in getting the loan is easier. So with that now comes another tool for our shed in trying to capitalize our small businesses, and that's going to be equity crowdfunding. So just looking at the global reach of crowdfunding and what's happened over the last few years, and this is kind of from all areas of crowdfunding. There's debt crowdfunding. As we talked about, some of the online lenders use actually debt crowdfunding as a means of actually lending out money. There's also the rewards and sites such as Kickstarter, Indiegogo, the donation sites that actually will give you some type of reward or incentive to invest in a particular project or business. And now equity crowdfunding is coming on a larger scale. Equity crowdfunding was able and up and going for a little while now for accredited investors. And we'll talk a little bit about accredited investors. Accredited investors are those individuals that have a sufficient income and net worth to where they can be actually certified and could already invest. And the thinking is they have plenty of money, plenty of capital to lose. If they lose something, then it's less of a risk. So our crowdfunding growth has gone from 2.7 billion to all the way up globally into 2015, where we're projecting 34.4 billion worldwide. And this was with very, very minimal equity crowdfunding going on. So how do we define crowdfunding? Well, how we do is we use this definition as being a strategic approach for entrepreneurs to raise funds for their business, for a product or project, from a crowd of people over the internet. That's our definition because we're here as a small business development center looking to assist businesses and small businesses, particularly in raising these funds. Now, if you look at some of those platforms as far as the reward sites go, it's perhaps a different definition because a lot of those sites are more arts and other focused. You have kind of arts and projects and food and some of the other things that are focused rather than that what translates to a small business. But equity crowdfunding is changing that. Equity crowdfunding is for businesses and to sell shares and to actually access capital in that fashion. So as far as the definition that I at least have for equity crowdfunding, it's the involved method of raising money over the internet that allows a business to finally sell shares of stock or equity, part of the ownership of that business, through a third-party intermediary or platform.
This is a game changer, Kelly.
It's coming. It's finally coming. And we've been waiting for it for quite a while. But we haven't been waiting long enough to where we don't want to ask you a poll first. And the poll is being launched right now. Angel, take it away.
How much capital ideally would you like to raise? So select from either under 50,000, 50,000 to 200,000, 200 to 500,000, 500 to $1 million, or over $1 million. So please go ahead and start voting now. Over 55% of you have voted. The poll's still open. Keep going. Wow. We've got a tie here with 70% voting. Now we've got 40% that want over $1 million, but our other number is 30% between 50,000 and 200,000, which is kind of right in the ballpark with small businesses, Kelly. 77% of you voted. We're going to close the poll now. And over 40% of you wanted $1 million. There we go. Here's our poll results. 50 to 200,000 was 30%. 500 to $1 million, 20%. Hey, nobody's going to take a loan for 250,000, Kelly.
Apparently not.
Apparently not.
Apparently 2 to 500 is not the sweet spot today.
That's not the spot today.
No, it's ironic that we hit even numbers on a poll. I've been trying to do that for 50 webinars now and finally succeeded today. So thank you for voting and thank you for participating. It looks like 60% of us out there today want at least $500,000 to perhaps over $1 million. And we'll get into the ramifications of that. And, that's important because when you're looking for capital, there's obviously different ways of raising capital. If you're looking for under 50,000, this might not be the way to do it because there are going to be costs that are associated with raising this capital. There's going to be fees that we are not even sure of the cost yet. There's going to be fees by the platform. There's going to be accounting services that are required. And other things that, as far as the due diligence goes, in addition to your time, that is going to happen for you to raise money crowdfunding-wise.
And you've got to set aside the time to actually market as well. Even though this is equity crowdfunding, you're still looking out to find who are those potential investors. So you've got to actually prepare to invest in time for marketing as well. So maybe perhaps below $50,000, it might take more work, maybe more work than what you actually want to do, particularly if you've got a micro lender nearby that could help with that.
Excellent point. Well, let's get on to a few of the terms and some of the definitions so I don't completely blindside you with some of these. And a platform is basically a crowdfunding website. The Security and Exchange laws require that you still cannot go out and directly solicit or actually make an offer to have somebody invest in your small business. It must be done through an intermediary, a third party, or crowdfunding website that is registered with the SEC. We're going to be talking about vetting and vetting a particular project. And vetting is going to be a different perspective, whether if you're the business owner looking to sell shares or the investor, which is the other opportunity that's here. Because now it allows us to put our investing cap on and also invest in small businesses if we want to do so. No longer do we have to rely on the Wall Street types in order to maybe round out our portfolio of small businesses, that we can actually go through this and vet and do the background checks and look at projects on our own. One thing that's going to really be important in this is the due diligence. And there's a lot of due diligence. And one of the big naysayers, when they attacked equity crowdfunding, is they worried about fraud and they worried about actually investors losing their money. When I think of that, I think about the former baseball pitcher Curt Schilling, who invested something like $50 million in a video game to lose it all. So you still need to look at, and this wasn't crowdfunding, this was actually a straight investment in a company. And so there's opportunity to lose a large sum of money or a sum of money. A lot of the people that are actually looking at the investment side of things, of crowdfunding, are suggesting diversification like they would in any other deal. we're going to be talking about equity, which is selling part or shares of your company. So a business that you have owned for 5, 10, 20 years is going to be a different business if it's owned by other individuals as well. We're going to be talking a little bit about intellectual property. It's important to have the skin in the game, and also the Jobs Act, the Jumpstart Our Business Startup Act of 2011, which the legislation was signed in 2012. Title III of that legislation is actually what is allowing equity crowdfunding to occur. So, why crowdfund now? Well, we didn't have the internet back in the 90s or before, so you couldn't do it then. And until 2009, there weren't really a lot of crowdfunding platforms or opportunity. As we saw, the trends are going through the roof, and social media plays an important part. It's perhaps the greatest funding potential ever moving forward. It's that much of a game changer. And it allows you to get not only your skin in the game, but others as well. And as we mentioned, the Jobs Act is actually what changed it. So we mentioned briefly some of the other crowdfunding opportunities that are out there. The rewards or donation that are incentivized by either the product itself, such as on Kickstarter, and others. We have a lot of social lending sites for debt crowdfunding. Nonprofit seems to be a growing segment, as is personal crowdfunding. And also, we're here to talk about the investment portion of it. Now, no matter what crowdfunding way or means that you try to go through in order to access funding, it's important, we feel, to have a plan. Such as you would a business plan, it's good to have a crowdfunding plan. The crowdfunding plan should define your project, and also you should have a timeline. Once the campaign opens, traditionally equity crowdfunding is over a larger timeline. It's usually over 60 or 90 days. The rewards, generally anywhere from 30 to 45 was the sweet spot. So it's a slightly longer open timeline period, but everything happens so fast and dynamic that you really need to work that plan. You really need to define the project, and you really need to keep it fresh and going in order to gain that momentum in order to get it funded. You're going to be required to provide a lot of information. There'll be background and history information. You'll have your market analysis and market strategy. And it's important to note that this is going to be on the internet. So if you have information that's sensitive but relevant and needs to be shown, you need to figure out a way to safeguard that from your competitors or not put that information out there. Important note also, as far as your IP, your intellectual property, you definitely want to have your intellectual property taken care of by some type of the patent or copyright. You're going to want to have a provisional patent in place in order to at least safeguard and build you some time in order to protect that intelligent property. There's going to be a lot of due diligence, and there's a lot of ways to really find businesses these days, and one of the simplest is using Google Earth. But also the due diligence is important. You're going to be providing historical and financial projections, again, sensitive information that's going to be potentially on the internet. And also, you're going to find that all of this information is really going to be mandatory or essential. Now, at the SBDC, we worked with a number of crowdfunding companies, or actually companies that have been crowdfunded. Here's a couple of them right now that were actually used on Kickstarter. And, what are the benefits of using a reward system such as Kickstarter or Indiegogo or GoFundMe or one of those other platforms compared to using actually equity crowdfunding? Generally, in my opinion, the smaller ones, the smaller amounts, for example, the food fix truck, it raised $20,000. That is still probably more desirable to use the rewards and list the rewards, etc., rather than try to use equity crowdfunding. The benefit of keeping it on the reward side is there's a cost of getting that reward out there, and that's the cost of raising your funds. So you retain 100% ownership. You have more flexibility in what you can do. You can have a different business entity, such as you can leave it a sole proprietorship if you want. Anything that's going to be equity crowdfunding is going to be an LLC, a corporation, or an S corporation. So it's going to be a different entity than yourself.
So Kelly, would you say, just to make a small or a generalization here, is equity crowdfunding better suited right now for businesses that have been established for probably at least 2 or 3 years versus looking at this as an option for you as a startup and looking more at the rewards crowdfunding for a startup, and then equity crowdfunding once you've really gotten some historical data on the business and you're ready to make that next leap?
I think the equity crowdfunding is going to benefit both startup businesses that have a startup idea, a concept, an intellectual property. Investors are going to vet it. They're going to look at what the potential is. They're going to be thinking, gee, is the next Facebook out there?
Mm-hmm. So startups that can scale.
Startups that can scale, but also from a family and friends perspective and customers and vendors, there's going to be an opportunity for them to invest in your business as well.
Mm-hmm. Mm-hmm.
So I think it works both ways. It works for existing businesses, but the existing businesses I think that are going to really benefit are those that are looking to expand and don't have the means to expand and can show and demonstrate by being capitalized by selling some of the shares of stock, they can actually grow that particular business. And, you're going to be giving up ownership. You have to feel comfortable doing that.
Mm-hmm.
And if there's an old saying, 10% of $10 million is $1 million. So if you own 10% of a company worth $10 million, it's worth $1 million. 100% of nothing is still nothing.
True.
So another one of our
there we
clients, there's Stevie Goals,
Mm-hmm.
reaching your goals. So those are a couple of the things that we did in the past. Okay, now for a little of the more mundane provisions and some of the rules and regulations. And I apologize in advance. This is going to be pretty wordy and a lot of text just because there's not a lot of clear definition out there in another format. So let's go through some of the provisions that are in the new regulations. Okay, the rules, what are called the recommended rules, they permit a company to raise $1 million through crowdfunding in a 12-month period. So 40% of you wanted over $1 million. That might have to be done in segments. You might have to look at other forms in order to actually leverage. Another factor we saw with donation crowdfunding was the ability to take a successful project and then leverage that into more debt or into more investment capital. So up to $1 million. Now, if you're an individual investor on the other side of things, you're able to invest, in a 12-month period, depending on what your income is. If it's less than $100,000, it's 10% of your income, and also $2,000 if it's 5% of your net worth. So those are the amounts that you have to deal with. One thing about it is it's going to be kind of a honor system. The platforms are going to be required to at least do due diligence in order to, they're not going to ask you what your income is, but if they see a significant amount of investment come through on a number of projects, that's going to probably present a red flag for them. So again, in recap, $1 million, up to $1 million in 12 months. And then depending on what your income is, how much as an individual you can actually contribute. And that goes for if you're Angel Control or if you're Bill Gates. So it doesn't matter on that. It's just a maximum of that 10% of 100,000. So there's a number of ineligible companies, including to start with as non-U.S. companies. So foreign companies cannot be crowdfunded in the U.S. on this particular exemption of SEC regulation. There's also some reporting companies and certain investment companies that are subject to disqualification under the regulations. Companies that fail to comply with the annual reporting requirement. There's annual reporting requirements, 2 years immediately to the filing of the offer, and others. So, and also, if you don't even have a specific business plan, that actually will disqualify you as well. So the business plan obviously is going to be a key component for investors in actually evaluating the opportunity. We get into some of the other areas, such as the securities are going to have to be held for a minimum of 1 year. So that opens up a whole nother discussion on the liquidity of these particular investments. And this is something that's going to probably create secondary markets, but those secondary markets have not been created yet. And so investors are going to have to hold on to their investment in a crowdfunded company for at least 1 year. The companies that are looking for crowdfunding money are going to have a number of disclosures. And a lot of this information will be filed with the platform, who files it with the SEC, and provides a lot of other things, such as the price or the security or method for determining the price. There can be a different level of security, a different class that needs to be actually shown. The target offering amount, the deadline to reach that target, which is in many cases going to be 60 to 90 days, and whether the company will access investments in excess of the target offering. And once we get this up and going and have some cases, it's going to be a lot easier for us. So, and we'll go to a couple of those sites maybe in a moment. So your financial condition. Companies that are looking for over 500,000 and less than $1 million are going to be required to provide reviewed rather than audited financial statements. Unless the company actually has audited financial statements that are available by an independent auditor. So what this means is those individuals that are looking for crowdfunding for $500,000, you're going to have, being a historic business, you're going to have those financial statements reviewed by an independent accountant, which means your accountant firm cannot do that. It's going to probably be somebody on the list from the platform or some other provider, and it's going to be a reviewed financial process. And that's not really a cheap ordeal. It's a lot cheaper than audited, but reviewed is still a little bit of a financial burden.
So this becomes something that you start to put into the plan and that you plan for. These are some of the costs and the resources that you're going to have to provide if this is a direction that you're going to take. So just like if you're going for traditional bank funding, there's some particular steps that you're going to have to take in order to potentially qualify for that. Same thing goes in with crowdfunding.
So other things you're going to need as far as the business and use of the proceeds is you're going to need information about the officers and directors. And those are all going to be subject to background checks. And they identify an owner or of the particular business or a director or officer as somebody who owns 20% or more of the company. So I look at that as opportunity. If you don't want to disclose somebody, they could own less than 20% of the company. Now, in all due diligence, I would still imagine that information is going to come out on other forms of information. But as far as the legal requirement that address this act, it's 20% or more. Which, if you look at the Small Business Administration with their loan programs, they're looking for personal guarantees on directors or officers that have 15% or more. So a little bit more leeway to work with here. They're going to also look at related party transactions. So if you have a number of particular businesses, say you have a business that actually is a supplier or vendor for this particular entity. If you own stock in that, particularly probably the 20% threshold, you're going to have to supply information related to that particular transaction. So if there's a little bit of co-ownership in some other entities that you work with, that's going to need to be shown. And then also file an annual report with the commission, and also make that provide that to investors. So what are the crowdfunding platforms going to be required to do? Well, number one, they will register with the SEC. Beforehand, every company that wanted to do an investment needed to register with the SEC. And it was a very detailed and expensive process. Now it's the platform that's registering, and you just sign up for the platform. The platform will then become a member of the National Security Association, which is currently FINRA. And then the company will actually be relying on rules, be required to conduct its offerings exclusively through one intermediate platform at a time. And that's important because I know the question is going to come up. Well, gee, can I have it on platform A and also on platform Z? And right there in the regulations comes out and says no.
Do you have to wait a particular time period if you decide to switch platforms before that you can do that? Do we know?
I haven't seen anything on that, but in the key wording here, I see exclusively through one intermediary platform at a time.
Right.
So I would guess when that offering expires that it could become available on another platform. More rules for intermediaries or the platforms. They are required to provide investors with educational materials on investing. They need to provide investors with the process for using their platform for investing. There will be a lot of discussion on the types of security being offered, the resale restrictions, meaning 1 year, and also investment limits. And I really think that until we get that secondary market, there's the potential for a longer holding period for these. There have been equity crowdfunded companies that have gone on to an IPO and other forms of investment, but they're very limited. And so until we really see clear-cut happenings on how people are going to make money in their investment and actually liquidate that investment, hopefully they don't litigate it, then we're going to have a big question mark. And lastly, the crowdfunding platforms need to keep accurate records of the account holders, and they need to reduce the risk of fraud. Wow, they got more rules and regulations. They need to keep it available for 21 days as far as a minimum. They need to provide communication for discussions about the offerings on the platform. So expect to see some type of place where people can go and share ideas and comments and pros and cons, and this is what I've had. So you're bringing in the social media phase and the old billboard on the platform. The disclosures are going to be fairly significant. They have to have confirmation that they've opened up an account. Reasonable basis, the platform must believe that the investor complies with the investment limitations, mentioned that a little bit earlier, and provide investors notices once they have made investment commitments and confirmations. So, boy, again, tedious this rule part, but a few more on the crowdfunding platform. And I'll try to be as brief as possible. But they really need to alleviate the fraud and really take care of the investor protection concerns, because that is why this took so long from being signed into law in April of 2012 to where we're finally going to get up and going in January of 2016. One thing a crowdfunding platform cannot do is have a financial interest in the company that is offering or selling security, unless, of course, they receive the financial interest as compensation for services subject to certain conditions. So essentially what that's doing is it's keeping the playing field level and keeping the platforms from showing kind of a preference over one offering or another. So some of the other regulations prohibit funding portals from offering investment advice. So please don't email them and say, hey, gee, these are 5 great projects. Which one should I invest in? Compensating promoters and others for soliciting the sale. So they can't actually, basically kick back to either the soliciting firm or someone they work with anything for getting access to that particular funding opportunity. And also, our safe harbor rules will come into play. They will be required to maintain books and records for the transactions of businesses. And all this, hopefully, will be effective on January 29th, 2016. So when we go through the fundraising process, and please do study those rules and regulations once they become final before you start a campaign. We will study them diligently. There are some that are subject to change, so we're waiting for the final regulations that should be out soon. So as we see, a lot has changed since 1933 and 1934 when these SEC rules and regulations that we're now talking about are changing. And with that gives the opportunity to actually have better access to capital. Globally, we see that still the number one obstacle to growing a small business is getting that access to capital. And hopefully now we have a game changer for both startups and existing businesses along with investors. Startups now have the opportunity to efficiently gain capital over the internet. The other thing that we didn't really talk about is that oftentimes when people invest in a product, they become an ambassador for that product. And so it also fulfills some marketing aspects and gets those first users out there. And those initial adopters are out there as advocates and pleading for your particular product. So that is also nice. The difficulty could be, traditional sources of financing, as we discussed a little bit earlier. And also there's a timing aspect. Again, the sweet spot here for investors is now having the opportunity of going on the internet and making intelligent investment decisions yourself in order to diversify your portfolio, be it your retirement portfolio or whatever, and gives you the opportunity now to have access to far more companies than you would have before. So we're seeing now verticals. We're seeing now specific industry trends that are actually growing. We see it in technology and retail. Real estate has really been the crowdfunding superstar over the last few years, and as seen there by the funds raised by Realty Mogul, a Southern California real estate crowdfunding team that has had phenomenal growth since it began in about 2012. So a lot of the things we hear out there by having equity crowdfunding is there's a high risk of fraud. I cannot tell you how much that has actually slowed down the process. There has been no cases of fraud. And I think as we become more fraudulent aware of all of the different fraud that's out there, the credit card that you hand to your waiter that comes back, okay, maybe not that example, maybe the internet example of where actually the phishing that happens in emails, and we see all this stuff happening, and don't click on this link, that hopefully the fraud will not be a problem, and there have been no reported cases all this time. Competitors will steal all my information. You have to control the level of information you disclose. I mentioned that earlier. I'm going to mention it again, as is protecting your intellectual property, because once it's up there and once it's out there, it's there. So safeguard that information, safeguard your intellectual property, protect it before you get into this process. So moving right along. One thing that we need to do is we need to have a team. And at the CSUB SBDC, we've started that. We have started having a team to where we're working with students and some of our existing senior level consultants. So when you bring us a crowdfunding project, we're ready. We understood through donation and actually reward crowdfunding that there is a method to get these funded. And it is a proven method. One of it takes a lot of diligence on your part and very actively planning. But you've got to bring a crowd. We cannot bring the crowd for you. Maybe the platform can assist, but it's going to work best if you both bring a crowd. So in putting together a desirable team, You're going to want that charismatic front of the room person who's the spokesperson, who meets with investors, who's the brand ambassador. You're going to want also the graphic design video person who can really generate those stunning visuals that help sell your idea, because that's what you're doing. You're selling your idea and your story. You need to have the social media person. And not only the social media person, but the traditional marketing person, because those two still work hand in hand. There's an online and an offline component to this. And also, you need the numbers person. You need the numbers guys to pull everything together where it makes sense. So how do we build that credibility? Obviously, the more robust and informative our story is, the more opportunities we have to close with investors. And that's true with any type of investment portal or any type of investment opportunity. So again, the team and the board, and to be able to identify your universal selling point or your unique selling proposition, your market, your competitive advantages, show the attractive and valuation, because that's what people are looking for. They're looking for that increased in valuation in order to invest in your project. And then it's about gaining traction. It's about strategically planning the campaign to where you get momentum early and you jump and move forward.
And this is something really that an SBDC consultant can sit down with you and help you to take a look at all of these different areas and see where you may need to increase the amount of information that you have available to these potential investors. So there's many different tools and resources that we have as consultants to help you truly evaluate each of these sections to ensure that you are prepared to do this equity crowdfunding. It is something that you do need to plan and prepare for.
I couldn't have said it better myself. So what do we do beforehand? There's, as I mentioned, an offline and an online component to this. And it comes back to the plan that both Angel and I have spoke to about having that crowdfunding plan. So before the campaign, you do a lot of work. You actually timeline out the campaign. You come up with media stories. You have ideas in order to keep it fresh. You have planned releases of information in order to keep that in the forefront of people's mind. You use traditional, non-traditional, local, national, global, bloggers, everything in order to pull this together. You have events. You have perhaps even product demos, public relations meetings, all this during the campaign in order to actually maximize the opportunity of success for the campaign. And then you execute it. You execute it, and you execute it. And there's a lot of the marketing ways that we've talked about.
Ideas with it. And that was something really, Kelly, that as we've gone through crowdfunding, even the traditional crowdfunding, even to this crowdfunding, you cannot let the campaign lag at all. So whether you're doing a campaign for 30 to 45 days or if it's an extended campaign, that's why this planning is so important. Because if you've got it out in a plan, if this is how often, and you put down the frequency and how often, who you're communicating with, why you're communicating, when you're communicating, as the campaign is happening, you can make adjustments in the middle of the campaign in order to increase wherever you're getting the most attention from. You might want to shift some of the priorities and the marketing priorities that you have, but that will give you the information. But if you think that you can launch this campaign and just put it out there on social media and it's going to work itself, it doesn't happen that way. So that's some of the background work that you need to be aware that actually has to occur for this to be successful.
Okay, moving right along. Okay, we know who our crowd is. Now our crowd isn't the people it was in rewards or donation crowdfunding. Now it's investors. Now it's perfectly good strangers who are looking at it from an investment possibility. And you're going to be promoting it in your network, but you're also going to be promoting it outside of your network. You're going to update the project. You're going to keep it fresh, as we mentioned. So who's in our equity crowd? We talked a little bit about this. Investors. It's going to be individuals investing in small businesses. It could be your first adopters. It can be your friends, and your friends of your friends. It could be acquaintances. It could be customers. It could be actually other strategic partners. It could be vendors. It could be anybody who enjoys your success, could be in your equity crowd. And the one thing that we really saw with a few of our campaigns for donation or rewards crowdfunding was that not everybody is prepared to actually just jump out there and go. So carry materials that give them information to actually guide them through the process if they want to invest with you, or sit down and walk them through it yourself. So we mentioned some of the due diligence, and this is areas that we're going to be studying probably later to see if it actually happens. But there will need to be a separate legal entity, compensation, and you might even get into dividend payout. But also, your compensation, if you were a sole proprietor for a number of years, is going to be questioned. It's going to be questioned on other members of your team if you have investors in there. So keep that in mind. And also remember, there will be winning portals and there will be losing portals out of this. Intermediary winners and intermediary losers. And we'll basically find that out from the marketplace, and we'll decide that accordingly. So a few of the things that we've talked about, you're going to want to have your website fresh, all your physical location. If you've developed this business in your garage, you might want to look at getting something other than your residential address out there. Directors and officers are going to be key, as is meeting the key components of a team from an investment perspective. Some of the platforms that are out there, and I apologize, I've talked too much and we're not going to be able to go to some of the websites, but we are going to have some time for your questions. So what platforms will thrive? Are there going to be platforms by industry? We'll see consolidations. We'll see some of the other things that go on. An example of how this might work, and let's use a very easy example. Okay, let's say we got a pizza joint here. Let's call it A&K's Pizza Joint.
Okay.
So we need a legal entity. Before we've just operated. Angel works the day shift. I work the night shift. And so now we're an LLC or maybe an S corporation. And we're looking to expand. And so maybe we're looking to sell 1,000 shares at $100 to yield us $100,000. We'll disclose that. We'll disclose what we think that ownership would consist of. Maybe it consists of 25% of the company. Maybe it's 40%. But that business valuation will be a key in attracting investors. Once they buy in to see the valuation, they can start doing other calculations as far as return on investment and other aspects in order to see financially if it works for them. Maybe it's Angel's family and my family that wants to do most of the investing, and we don't have to provide as much information because they're willing to be more fans and friends and family, and potentially perhaps fools. So we'll disclose what our compensation is, the income that's paid out, the long-term growth potential is what they're looking at. Sure, we have one pizza joint now, but we could have 15 by the end of 2018. And remember, now you're no longer the owner. You're no longer the sole proprietorship. You're part of the ownership team. And you are responsible for addressing those individuals that are other owners. So some of the benefits, a lot of benefits. Perhaps it's earlier investment than some of the other investment opportunities. Hopefully it can be a quick and easy way of raising capital. The downside. I mentioned a lot of the downside already as far as your personal information being out there. But there are other downsides as well, potentially. So maybe it's not sustainable as an expansion cash stream. You're going to get this cash stream now, but maybe it's difficult or costly to go back in another couple of years and do it again. It's still going to take a lot of work. No matter how you raise capital to grow your business or to start a business, it's going to take a lot of work, and it's going to take a significant amount of research. Investors relations. I imagine there'll be this can be outsourced, but there are rules and regulations on how you're going to have to keep every information, all this information on your investors. and you're going to have to notify them with financial statements and a lot of other information as you grow. And making sure that you do that, making sure that now that you're a corporation, you have your regular meetings and your corporate meetings and your minutes, and you make that information available, is all going to be vital towards success. Okay, I have a tendency to always end with this slide, so let's do it. Old school, give somebody good service, they'll tell a friend. Bad service, they'll tell 5 friends. Today, give somebody bad service and they will tell thousands of friends. So that kind of wraps things up for now. What we're going to do is we're going to open it up to some questions. And Angel, take the questions away.
Is this how can I get a copy of the PowerPoint? Fill out the survey once the webinar is done, and we will send you over a copy of the PowerPoint within the next day or two. I did want to say a little bit of something regarding the downside of equity crowdfunding, and this is just something to remember. Like Kelly said, anytime that you're going for capital, it's going to take a certain amount of work from you. You have to remember that there's no such thing as a free lunch. So you're going to pay one way or another. You will pay. You will pay with your time. You may pay with other resources, but that is part of you having skin in the game. Skin in the game is not just financial. It comes from all of the other aspects of what you have to do to make your business successful. So yes, crowdfunding is absolutely an innovative way and another way to finance a business. But again, it's going to be something that's going to take a little bit of work. You can definitely make an appointment with an SBDC consultant to sit down and talk about what are the different avenues, not only crowdfunding, but micro lenders, traditional banks. If you're looking for capital, we're the ones that are here to help you determine what's the best route for you to take. None of these things happen instantaneously. You're going to have to do some work to actually get those things. Those loans that come online that are instantaneous cost you a heck of a lot of money. So again, there's no such thing as a free lunch. You're going to pay one way or the other. We hope today that this has been something beneficial for each one of you. We're trying to stay as far ahead as this as we can because it is such a game changer in the world of business. And I know that in early next year, we'll have additional webinars on this topic, and we hope to actually bring some more businesses and use some actual examples that are out there that are happening right now. We're hoping more businesses take advantage of this great opportunity.
Yeah, and I think you hit it right on the head, Angel. I think you hit it out of the park when you said that really the best thing is if you're looking for business capital is to come in and to really assess and look at your situation. Look how much money you're going to need now, not only now, but also in the next 18 months.
And you have to come in and help us do some due diligence with you. Okay, so we as SBDC consultants, we educate, we recommend, we advise, we guide, but we do that based on the information that you give us. So we can only give you advice based on the information that you share with us. And so it's very important for you to be ready to talk about what your personal financial situation is as well as the business financial situation that you're in, because then that provides us the best opportunity to put you in the right direction. So we want to know, is there a fee to use the crowdfunding team capability? No, there is not. That is actually considered part of the consulting services that we offer with the Small Business Development Center. So that is something that if you currently are with a consultant, you can speak to your specific consultant about how to pull together the crowdfunding team. They would help you do that. If you are not currently a client, on the screen you can see how you can get in touch with us. The easiest way is www.csub.edu/SBDC and click on the Request for Services button. Fill out that information, and in less than a week, someone will be in touch with you. Okay, and you're going to, that's how you get an appointment and take care of getting an appointment to come in. We're getting to be close to the end of our time. It's 12:59. Can hardly believe that it's been our 50th webinar, Kelly. It's a pleasure to be a part of the team.
Number 50.
Well, we hope that this was helpful for you today. Again, as a reminder, there is a survey at the end of the webinar. Thank you for joining us for CSU Bakersfield Small Business Development Center Webinar Wednesday. There is a webinar coming up. Is it next Wednesday, Kelly?
Next Wednesday on the 16th, and it'll be on a fantastic topic. We have a great presenter, Denise Winston, who is a vice president of Granite Insurance, and she's going to be dealing with employee benefits and maybe some year-end checklist and other things that maybe a lot of us should look at, and other opportunities in avoiding pitfalls in our employment benefit program for 2016.
Once again, thank you so much for joining us. Have a great rest of your day.
Goodbye now.